What's going on, everybody? It's your boy C-Zar, and we are talking about gold today. Yes, XAU USD gold. It is the 14th day of March. It is the weekend. The markets are closed, so there's no trading actively going on with this chart right now, but the weekend is a perfect time to analyze charts like this, I think, because it'll get our minds right for the coming week ahead and get our preparations in order. Here we are at $5,021 per ounce. Hit that like button, subscribe. Thank you all for being here. Let's get into it, okay? We've seen a rather parabolic move, and it didn't even start here. I would say it started way back here with this rounded bottom. I mean, you've just been in a very parabolic structure overall. It is possible that we're at a high point, that we are at a point of contention, and that we do pull back. That doesn't mean that the party's over, though. You could be at a high point and still continue to grow from here. I mean, gold could certainly get more expensive, especially with how things are going in the world. You know, it wouldn't be crazy at all if we did see a continued rally from here. But maybe first we see a little bit of consolidation. So looking at this, you know, this chart dates back to 1998. From a high, our relative kind of significant high here to this low, the high back in 2011 to the low in 2015. I'm sorry. Sorry, guys. We went all the way up to about the 2618, the double golden extension. Okay. We found resistance here at the 1618 for a little bit, right? We consolidated there for about a quarter of a year or more. Consolidated in this range here, and then we just basically blasted up all the way to the 2618 area. We are finding a little bit of resistance. It wouldn't be crazy at all to pull back to the 2272, which is crazy because we're at $5,000 talking about a move that could potentially take you down to about $4,000, something like that. If we look at this from a non-extension perspective, but from a retracement perspective, from a low to a high, I wonder if we get similar kind of results. We get a $3,700 target. I don't know if this is appropriate because it is from 2015. Let's take the low that we really started to surge from. I think it is appropriate overall, right? Like here was your bear market low, whatever. You had your crab market, and then this began the current bull market that we're seeing take place now. But this low started this move. Let's take that $4,100 right there, right at the 236, high to low. That's right there at the 2272. They line up together. It's perfect. It's nice. It's great to see. And that would be the level that you would ideally hold if you were to continue rallying. Now again, we can stop here for months, for even years. We stopped here. You know, if you got bearish on gold here, you might have thought that you were right overall, but you might have been waiting for a larger pullback when really it never came. You just continued to rally. I'm actually kind of curious. What did we do here from a low? Come on now, low. Oh, that was not the low, but this is the low. Come on now. Low to high. We went to the 236. We did find support. Then we found a double top, and we went all the way down to the 382. So that is a possibility as well. This is a bit more of a shallow fib retracement. So I think that's, you know, it was a little bit more attainable to go to that 382. It's not that you can't go to the 382 here, but if we do go to the 382, you're likely going to be in a, I mean, at that point you would certainly be in a bear market, and we might see a longer phase of consolidation and accumulation before we actually do see new highs. So I'm not expecting that personally. That's not the call. But I do think that it is completely possible that gold could drop roughly another $1,000 from here. Again, we've seen two different fib levels line up with that. We look at the monthly RSI, and we are seeing the highest readings that we've ever seen in this chart's history. Damn well near 100. Come back down, cool off, and then we'll continue to rally. Notice how you've been moving up with such strength that as you're moving down now, you're not really moving down too much in comparison to this move overall, yet your RSI is really tanking. Right? You don't need much to the downside. You don't need much consolidation for this RSI to cool off. It's completely possible that we stay above $4,000 and still cool this RSI off, cool off the stochastics, cool off the MACD. Right? Whenever we topped off here before, we did not have bearish divergence. Whenever we topped off here before, we did not have bearish divergence. Not on the MACD, not on the stochastics, not on the RSI, none of these times. So if any of you are looking on the monthly time frame and looking for bearish divergence to give you a bit of a hint, you're not really going to get it. But with that being said, we do have a little bit of bearish divergence on the stochastics, which I think is a little bit telling that, again, some cooling off might be in store for us. When gold cools off, typically that is a time where money rotates from gold into other commodities. So there's going to be opportunity probably with that. We look at this here on a weekly perspective. The weekly RSI, I wouldn't say that's bearish divergence, but you've been overbought, you've been hot for a while. The stochastics certainly have rejected the overbought zone. There's a little divergence there. The MACD has no divergence itself, but you're at a high point, you're at a hot point. It would be completely acceptable and normal, I think, to cool off from here. Okay. We look at the daily time frame. The daily RSI, I think this is where things get a little bit more telling, but this is probably as low as we'll go on gold. We probably won't go into any shorter time frames. Here, you're getting overbought, no problem. Here, you're coming up, getting overbought, no problem. Holding above the 50 for support, holding at the 50 here for support, getting overbought, no problem. Here, we've held the 50 now several times for support, and now we're through it. We've gone below it. That's different behavior. Paired with the fact that we didn't get overbought, that's different behavior. I think things are probably more akin here to what we were doing back here rather than what we were doing back here. So, and maybe even more bearish. We'll see. We might be overdue for some oversold readings. We haven't been oversold since 2024 in November. Here, in these readings that we're going to compare it to, gold moves sideways. As long as we are effectively holding above, I would say, probably about 4,700, 4,650. As long as we're holding above there, I think we can absolve ourselves from going down to these low $4,000 areas if we're just moving sideways like this, right? This was a pretty tight range. If we maintain a tight range, I think it's possible. And at a later date, then we can say, okay, we were wrong about this. We've been holding up well. This probably means that we're going to continue to grow, just like it did last time, just like it has every time before, or most times before. The stochastics are getting into the oversold zone. And with that, I'd just like to analyze real quick what we've done the last few times that we were oversold, right? You can see here that we're getting into the oversold zone with the blue line. The orange line is short to follow. What happened here when we got oversold? What happened here when we got oversold? And here, stuff like this. We haven't been oversold in quite a long time. So I think that the most comparable readings might be this one here and this one here. Oversold over here. We'll just look at these, right? When you were oversold here, whenever you got oversold, we did move down. We did move down, but just a little bit. And then really we moved sideways for about a month. We moved sideways. And we moved up. We recovered. Whenever we were oversold here, it had been some time really since both of these oscillators were in the oversold zone. We were oversold. We did move down a little bit for the days to come, but really, again, we moved sideways. Here, same thing, a little bit down after that, but really we just moved sideways afterwards. Here we didn't really move down. You're at your low point whenever you got oversold. So in this kind of context, again, if we move sideways, if we move a little bit lower, that's okay, but if we just move sideways, there's really some promising prospects there that we could continue to move higher, that this party is not over right now, or that it's not even taking a pause. The MACD is kind of hot. If you notice too, with all these points where we were oversold on the stochastics, the MACD is actually very close to this right here, this zero level. That's the zero level right there, this little dashed line, right? That the oscillators were very close to the zero here, bouncing off of the zero this whole time, holding up above it. Right here as well, holding the zero level for support. If we see that same kind of thing, and see here's the difference, we're oversold right now, almost oversold. The MACD is not anywhere near this zero level, not like it was any of these times, right? We're a little bit more hot, a little bit more hot. We're getting deeper readings in the histograms than we did back here as well. This again is kind of another reason why I do think that we'll pull back. And we likely do see a little bit of a lower price action come in, a lower price area come in over the coming months and maybe throughout the rest of this year. Who knows how long this consolidation could last? It could last for a quarter of a year. It could last for a year and a quarter. It can last longer than that or shorter than that. I would think that if we're not below 4,000, let's say $4,650, if we're not below $4,650 in the next quarter by the end of Q2, yes, by the end of Q2, then I would say there is a chance that we are not going to proceed lower, that we are upholding, that we are doing the same things we did before, and that we will likely recover. But if we are below 4,650 on a daily closing basis, not just on a wicking basis, but a daily closing basis, sometime in the next quarter, I would think that that's incriminating that we will in fact go to these low $4,000 levels or even lower. We could be kicking off a bear market. This really could be the end of the rally. I'm not entertaining that thought right now, but it is possible. I mean, it's definitely the end of this rally momentarily. It is a momentary high. I'm very confident in that. I'm the least confident in this idea that we move sideways and then we recover, months from now, and then that we continue to rally as we have all of these times. But I certainly entertain that thought. The most likely outcome, in my opinion, is that we are likely in some type of recovery phase that will take us toward $4,000. And the MACD, I think, is the telling part here. The RSI is a bit telling that we're more bearish. The stochastics, I think, is the most bullish argument you have, and even this would say that over the coming days we likely do see some downside. I don't really have anything else that I want to say. I hope I've given you guys some things to think about. If I had to guess when we're gonna find this low, I don't know. Let's see. Here we found a low point in this consolidation phase in May. Here we found a low here in October. We found a low here in November. We found a low here in June. October, November, May, June. Pretty similar timing, right? Gold doesn't just move, doesn't drop through the floor. September here, September, October, November, right? That kind of time frame there. Here, October again being a low point. Low point here in March. I don't think that we're going to see a low point in March. I mean, if we do, that's great. Probably continue to rally. Timing-wise, things are a little bit different as we go through, but I don't know if that's the best form of analysis, but time analysis is a little bit harder to do and to get accurate than price analysis. So as far as when do we get down to $4,000, $4,100 in that range? I doubt that it'll be by the end of Q2. I do have hopes that it could be by the end of Q4 of this year. And then perhaps 2027 can be a time where we start to recover and we continue on with this bull market for gold overall. Or that might be a point at which we're starting to really see the red come into view and start to acknowledge that we are in a bear market with gold, that it had its rally and now it's time to go on a multi-year consolidation and accumulative phase until we are ready to rally again years later. Hit that like button, subscribe. Thank you all for being here. I'll see you in the next one. Take care. Bye-bye.